The chair now recognizes the gentleman from Nebraska for 5 minutes.
Thank you, Mr. Chairman, for holding this important hearing. Chairman Gensler, welcome. What's causing the rise of the price of gasoline?
You know, I'm spending so much time thinking about enhancing customer funds and working on these rules. What we're not a price-setting agency. It's not what Congress asked us to do. We're an agency that oversee the markets to ensure that they're transparent, competitive, and free of fraud and manipulation. And so that's what we can best do to ensure that these energy markets work and that whatever price, high or low, in the energy markets and the agriculture markets reflect buyers and sellers, both hedgers and speculators, meeting in that market.
Right. Here's what's at issue. If you look at demand for gasoline, in fact, you see lower demand currently. Supply disruptions, perhaps volatility in the Middle East are a factor, but not significant enough to probably correlate directly to this spike that we're seeing currently. Back to Mr. Welsh's question earlier, it's been suggested by your own commissioner in a recent article, Bart Chilton, that there is a speculative premium built into the price of gasoline that may be as much as 56 cents per gallon. Do you agree with that assessment?
I agree that we need to make sure that our markets have a strong oversight, that we have a strong anti-manipulation regime, that we have transparency, and yes, that we complete position limits. That's where Commissioner Chilton and I are very much aligned.
These current speculative position limits would adequately address the problem?
I think that the whole regime, I must say, I think that the limits are one part to ensure for integrity of a market, but I think that it's critical that we complete the other rules with regard to transparency, that we actually give the public the benefit of this whole work that this Congress did and that we are now about a year late on.
What would you surmise the correlation to be between the Federal Reserve's loose monetary policy as driving down the value of our currency, therefore increasing commodity prices, particularly oil, which tends to lead the other prices? What is the correlation there? In other words, our debt, and the way in which we're printing money to solve it, lending itself to higher commodity prices as a major factor in this uptick of retail gasoline prices.
I've not seen a study on that.
I haven't either. That's why I'm asking you. But we're trying to examine all of the factors here that are involved.
Right.
I mean, something's doing it.
You're absolutely correct. But if I might return, I think our role as a commission, as an agency, is not to set a price or even that a price is low or high. It's really to make sure the markets are transparent and work for the
I understand.
American
You're
public.
just an expert in the dynamics of these markets, so it would be helpful to hear your opinion as to all of the factors that are driving up the price in this regard.
Though at any one time there are many factors, I'm not aware of a study, and if there is one, I'd certainly read it and so forth, but on the specific point that you mentioned about the monetary policy and so forth.
Could be a factor.
Well, there are many factors that come into markets. These markets, to just give you a sense of the oil market today, and we publish these figures every Friday, has producers and merchants, and that makes up between, I think, 13 to 15% of the open futures market. And there's swap dealers that makes up a big group, and then the managed money, that's the hedge funds, and then other financials. So somewhere between 80 and 85% of the futures market are swap dealers and what we call managed money or hedge funds and other financials. And 13 or 15% of the futures markets, this is on the NYMEX and so forth, are the producers and merchants.
How has that ratio shifted through the years? It used to be inverted, is my understanding.
we've only been breaking out this in the 4 categories. We started doing that about 2 years ago, and we published, I think, 5 prior years. So over those 7 years, it's shifted a little less than you said, but yes, it's shifted
significantly.
A little bit more towards
Speculation.
financial.
I'm about to run out of time. I'm sorry. I'll interrupt you right quick. I think the broader point here is we're deeply concerned that a system originally designed to mitigate risk is actually creating risk now.
Well, I think that that's just a keen reminder as to why we have to continue to get our oversight right, and also that we need to be a fully resourced and funded agency.
Thank you. I'll yield back.